Hi, Larry Gaines, Power Cycle Trading. Well, whenever a market experiences a big sell-off, the first thing I always go to is I want to see what happens with the retracements or commitment to the move on a retracement back up to the moving averages. A lot of times we call that mean reversion, but I like to look at the major indexes. So here's the NASDAQ, here's the S&P, here's the Russell 2000, here's the Dow. So we had the massive sell-off here over the last 2 weeks, basically going from this swing high back here on January 29th to the swing low that we had last week on the 9th. And so then what you want to do is look to see what the retracement levels, what levels it hits, and where are the major moving averages. So looking at these charts, let's take a look. So your normal, typical, it better at least get through the 382. That's your kind of your standard level. So you can see the NASDAQ's coming up to the 382. You can see the S&P's at the 382. The Russell's not quite there. The Dow's there. Now, the really big area is the 618. So if this we continue to get a rally here over the next few days and more of a retracement, the 618 is actually the key level that you want to look at. And if the market fails there, that's usually the last line in the sand. So if the NASDAQ's ever to recover and get back above that 50% retracement, goes to the 618, or if the S&P gets that 618, that's the level that you want to really key in on and see if it can hold that and needs to get back above it in order to continue the move back to the upside. So those are some key things to look at. So first off, we've got that 50% retracement level coming up, and then the 618. Hope this helps. Talk to you on my next video update.